Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a great day. I'm going to try to get through a Bitcoin analysis here today before my voice gives out. It's kind of on the edge, so apologize for that. Future reference, not feeling super hot, so I'll try to cover our priorities here today. Thankfully, we covered Bitcoin yesterday and took some nice solid profits on our short position there. 21% in 22 hours. We shorted 96.5 to 94.5. So pretty cool little situation there. We got more potential profit to be taken here if we look at this liquidation range. It has been swept, but there's possibilities of more liquidation being present. We take a look at our Twitter post here from yesterday. I post playout charts on my Twitter, Telegram, and Discord. You can see that liquidation range is what we are targeting there. And if the price had closed above that 97.5 range, it would have effectively invalidated, okay? Now, future reference, if you're not familiar, I send out trade alerts too, kind of highlighting these things. And I mentioned that we have specific resistances at 97, 98.5, and 100,000, and that invalidation of the short is a close above that 100, roughly that 100K mark, right? So again, $100,000 is that resistance level. We kind of recognize that and understand that Bitcoin's going to have some difficulty getting across that level again. Between now and then, we're in a descending type of trend. There's no doubt about it. We got to respect the fact that the price will probably continue lower until it doesn't. So we're just going to go ahead and draw out some little trend lines here. And once again, I'll update our playout chart, post that on our Twitter, Telegram, and or Discord. So let's go ahead and talk a little bit about the backend data first and go from there. And I want to say thank you to everyone who provided some really awesome, super sentimental comments yesterday. Really appreciate that. I'm here for you, folks. Absolutely trying to make sure we make a difference in the market and just help newer traders get destroyed less often. We have a lot of advanced traders in our community too. Don't get me wrong, but I would say newer traders do tend to gravitate towards my content just based on it being more educational. And the whole concept is make sure that you learn how to trade so you can trade for a lifetime instead of being reliant on either my signals or just in general, just reliant on anyone else. You should be able to do this yourself. And a lot of it comes with looking at liquidation, which we're going to talk about, and also just best practice, which I like to, infuse in my videos. So apologize if I sound like a broken record. It's trying to just help, get people on track there. Anyways, 94,000, boom, look at that. Perfect little area of liquidation here. We had, I didn't add it up, but it's probably somewhere in the range of about 5 to 10 billion as a rough estimate. Each one of these red bars is closer to 2 billion, but yellows are effectively 1 billion. So anyways, the whole point of that is that these areas of liquidation are commonly swept just based on the price being closer to that range. Granted, there's a ton of liquidation upwards of 100,000 plus, but we're not in that area anymore, right? We're closer to 90 than we are 100,000. So in turn, the likelihood of price going down is greater. And again, these just work as magnets. These are not exact science barometers of like, hey, it's going to this exact level. But a lot of times you can set profit targets in liquidation ranges and get find a lot of benefit there. Okay. And again, the main reason why is because those are key level supports, but market makers know that because a lot of people will put their stop loss right at these levels. So if you ever consider a stop loss or a take profit target, you should be just above or just below these ranges to ensure that you're not going to get wicked out, right? And that's just a super common occurrence. And you look at the price action, look how gnarly this is. No less than 8 hours ago, the price was testing 97.5 and it dumped ever since. So like, this is a liquidity sweep here for late shorts, and this is a liquidity sweep for late longs, right? So again, they have a tendency of just destroying in both directions, and then the price goes wherever it wants after that. And the reason why they do that is because they can control the price action by removing opposition, which is high level shorts or longs that are providing supports or resistances. Okay. Anyways, it's easier said than done, but it's a big part of the game, and it's just something that's important to recognize if you're a trader. Back in data here, we can see we've shifted bearish. This was present yesterday. In fact, when I sent out my analysis or my trade alert, I kind of just let you know that we're now bearish. So the best thing to do is to get on board with that, than to try to trade against it. Okay. So again, the overall trend has shifted. We're looking more bearish now. Doesn't mean you take a short here at support, because this is somewhat of a support range. We'll talk about that in a minute. But the key takeaway is we lost this local resistance, this local point of control at 95.5. In fact, let's take a quick look at open interest. This will kind of tell us a lot where people are hedged. And this is a good barometer of kind of understanding where people are have the most or the largest positions, or the largest accumulation of position size at certain areas. So 96.3, look at that here. We got some late longs. What do you know, folks? pretty consistent there in the market. That's why market makers will trap you into late longs, make you think you're coming up, the price going down. This is a pretty obvious bear flag pattern. I'll show that on the charts here in a minute, but those are things you want to try to avoid, especially in a bearish continuation. You don't take longs until the price actually truly breaks out. Being a breakout trader implies that you're trading into the breakout before it actually happens, and that's what a lot of folks got trapped there. Anyways, 96.3 is somewhat of a resistance level now that we have a lot of high positions. And the reason why, folks, if you think about it, if the price ever comes back to that level, those folks are going to want to sell at break even. So a lot of times that'll work as a resistance because the price will be sold at that point and the price can continue lower. Anyways, no matter how you look at it, 96.3 is that rough estimate. Let's just say 96,000 for that local point of control. And we can kind of see, we zoom, technically if we zoom out, I think it'll be 97. That was our more macro point of control, but we got more positions added at 95.5. So yesterday we saw 97.3 as that point of control. Today it is now 95.5. Basically just implying the price comes back up, it's more likely to reject out and continue lower. Okay. Again, respecting the descending trend. So that's generally like where we're at. So what does that mean for you? Does that mean you take a long into it? No. Does that mean you short right now? No, probably not. You want to wait for that short that may never occur. You're going to be better off doing so instead of shorting the bottom, right? That's generally the concept, right? Again, so whatever you're doing, whenever you trade, you want to trade with higher success, right? So why trade against the trend for starters? And then why short when the price action is likely as low as it's going to go for the moment? Again, it could continue to run, all good. I don't care if we miss that opportunity. We're already locked into a short anyways. But the whole point of me mentioning this is just, FOMO is a very real thing, and some folks, they just get really, they start revenge trading. Like I even have people like asking me for money if, I can kind of help them recover their account. Well, it's nothing I ever do. I'll never do that just because I want to teach you how to do it, not just enable you. But for the most part, it's frustrating to see these people getting destroyed by other market makers, by the market makers because they're following other idiots online who don't really know what they're doing. Anyways, regardless of that fact, I'm not a professional. Well, okay, I am, but I'm not, I make mistakes too. Everyone does. There's really no way to be perfect in this market. I guess that's the whole point. Anyways, what I'm mentioning here is that we're under the 50-day SMA and the 20, right? The 20 is that initial trend setter. Being below the 50 generally implies bearish continuation, so we may want to presume the price is going to continue lower until it doesn't. That's generally the concept. We're also, so far, on the daily time frame, we don't close above 94.8. We're going to be in a world of hurt here because just say round number 95,000, we got that local low, we close below that. That does imply more bearish continuation potential to the downside. We've also lost 50 on the RSI officially. Yesterday it was tentative. And at this point, money flow index is lower, stochastic swinging down for the second time. So a lot of reasons why the price is probably more likely to go down. So taking a long on alts or Bitcoin right now is just a bad idea. It's just a general concept. We look at Bitcoin dominance. It's kind of plateauing here at about this low 58% range. Generally speaking, we lose 58%. It'll be positive for alts. The price of alts will go up. But at this point here, as the last 3 days indicates, altcoins are semi-suffering. They're not doing all that great. And it's not really a good consideration to take a long yet until we break that 58% threshold. That's just my personal opinion. Take a look here at the 4-hour time frame. Let's go ahead and respect here where we're at with the trend line. And what I mean by that is just that oftentimes when you trade into a long position, you want to trade knowing that the 20 or the 50-day SMA is below you, or below the price rather, and then just ensuring that you're moving in the direction of the trend. Right now the trend is obviously down. There's no reason to take a long into this. You can see here, hypothetically 97,000, that was again that area of consideration for short entry. We got in at 96.5, a little early, but I wasn't willing to wait that long. We actually had a second entry at about like the low 98K range that never got filled. The whole point of this though is that I talked yesterday about the 20-day SMA holding as a resistance for the moment. We can see the 50-day SMA also reaffirming that. So this descending trend, again, you don't tread into it. What you do is you wait for the price action to be comfortably above this indicator, preferably this one too, and then you take a long into that direction, right? But for right now, taking a long, even though the price should recover here briefly, just because of how typical sell-offs occur, we swept all that liquidity, people are going to be buying in, and it's just one of those situations that you kind of got to understand is a very real thing. Okay, so continued selling pressure seems likely here, considering we've been stuck under 50 on the RSI. Money flow index is right there, essentially with it. MACD's diverging, stochastics kind of drawing dead. There's not a lot of reasons here why taking a long makes any sense. If the price goes up from here, cool, whatever. It's just pretty much just you're getting lucky if you took that trade. And not to say that that's bad, it's just, do you really want to trade consistently with luck? How long is that going to last you? It doesn't last long. Because again, you're going to start developing these poor habits, realizing that, hey, oh great, I'm just going to buy every single dip and I'm having some good times. Eventually, it's just going to keep dipping and dipping and dipping and never stop, and you're going to be totally screwed. Again, if you've been in the market for at least 6 months or longer, you'll probably know what I'm referring to here. But if you're newer, congratulations on hopefully discovering a better way to trade. See here, take a look at the hourly time frame. Cloud, we're below the cloud. This is another kind of area that I talked about yesterday, and just the consistent resistance, right? So staying below the cloud basically just implies we're below the trend line here, and there's no reason to consider a long position, okay? Again, at least with confidence. You can take a long, all good, just watch it close. Day trading is a different story. I'm referring to buying now and maybe selling in a few days though, right? From a swing trader's perspective, this is garbage. You don't want to trade this. If you consider taking a short, I would say wait for the trend line to be retested, right? So hypothetically, the price comes up here, kind of starts testing this local point of control at 95.6, 95.5, then that would be a cause for consideration for a short, okay? Because again, you have a lot of confirming factors leading into that the price action should continue lower. That's generally the concept. Again, all we're doing is increasing our odds of success by taking trades in the direction of the trend, right? There's other confirming factors and all that, but if you were looking for like a magical indicator or, some, I don't know, I hear people talk a lot about market cipher. It's basically just a combination of all the stuff that I use for money flow index, RSIs, all that. It makes it a little easier, but it's still not a one size fits all, right? So, you can get confirming factors to the upside that, hey, we're shifting gears and all that, and then the price instantly rejects. Again, all the more reason why looking at liquidation, points of control, open interest, these are all, they all need to happen together, I personally feel. Again, just increasing the odds there, if you will. However, no matter how you look at it, I'm just going down the rabbit hole of just spinning in circles and talking in circles. So I hope you learned something today. That's the whole point. Thanks again. Feel free to comment below if you did. And if you didn't, that's cool too. Perhaps another video will speak to you. I plan to cover another couple altcoins today. I should be able to get through that, pending my voice sticks around. So I'll go ahead and get on to it, and I hope you have a wonderful rest of your day. Thanks again so much for being amazing parts of my life. If you want to join over our cryptocash.tech, feel free to use the link down below. Make sure you reference Bitunix too, folks. These guys are phenomenal. Nice deposit bonus rewards available this month only. Next month, we'll probably have like a deposit, like a trading competitions. They keep doing that. It's pretty awesome. But future reference too, if you're new to our community, make sure you reference our trade alerts. This is available to all members. And obviously, if you're going to follow my premium signals here, make sure you read through the signals guide. Don't just blindly take long positions or short positions because I'm taking them. While you have more success, it's still not the right way to trade. You want to use proper risk tolerance, and that's all covered in there. Okay, hope you have a good one. Thanks again for your time. We'll see you soon. Bye-bye.